welcome back to the show, and I'm with Bobby Savelle from Ultimate Tax and Advisory. How are you, Bobby?
Very good, Michael. How are you, mate?
Good, good.
Excellent.
And look, quite often you go to accountants and they look at your books and they kind of add the numbers up, do whatever you guys do and go, that's how much you owe the tax man, or if you're lucky, he may owe you something. Bobby's laughing, going, not really.
Not really.
But for business owners, when they come to you, you're a little bit different. You like to go a little bit deeper with them, and I know you do these quarterly reviews with people. What are some of the things you've been looking at recently, helping people get the maximum value out of their business?
Really, we look at a holistic approach in your business. We look at what's your sales processes, what's your marketing like, what's your pricing structure, which is the accountant side of things coming out of me. And it's also, where are your costs? And that's the biggest thing which people tend to, when they get more money, they tend to go, great, I can spend more. And that's when the whole cash flow cycle happens. So that's something which we really ensure that the business owners themselves, who may not be numbers savvy, they're obviously great at their trade or whatever business that they're doing, but they may not be numbers savvy, and go, okay, listen, these are the type of things which we need to look at and mitigate, otherwise it could spiral out of control.
I know one of the things that I fell into, one of the traps I fell into, I should say, is when I had the building company, was stock levels. I got more money, so I thought, I could buy more stock. It looks good, the shelves are full.
The shelves are full, and you know what, come 30th of June, which is fast approaching us here in Australia, or the world I should say, why Australia? Tax time in Australia anyway.
Yeah, tax time for us.
So stock levels, if you've got a high stock level at 30th of June coming into 1 July, the ATO wants you to actually declare that as income. Because it's,
Oh, hold on.
Whoa, what was that?
Hold on. What do you mean income?
So you've bought all this stock, but you haven't sold it.
Right.
So the ATO goes, well, why are you getting a full expense out of it, but you're still holding that stock, so why should you get that deduction? So you're buying all this stock, it's dropping your profit, but you're holding, let's say 100% of that stock, as if you bought nothing at all to the tax man.
Wow, I actually didn't realise that. Because I thought, you go buy all your stock and just write it off.
Of course.
Well, that's
of
logical
course,
business.
That's the logical business owner mentality. However, for the ATO, it is something which they want you to add back. And that's why you see all the car yards, all the retail stores, all the online stores having those 30th of June fire sales.
So when they get to anywhere you are around the world, when it's end of financial year for different spots around the world, it's different times. It's best when you're going, maybe have a good chat to your accountant, and then I suppose, do you work out what the difference, because you're good with numbers. I mean, I wouldn't be able to work it out, but you could. Then if you discounted this, but the savings you'll make on your tax will be, is this the type of things you start looking at?
Exactly right. So we look at, well, obviously at the end of the day, it's, if you get cash, then that's a lot better than just holding stock on your shelves.
Oh, absolutely.
That's how I look at it. So if you do sell it, if it's what I say to especially retail owners, if you've got redundant stock or aging stock, just get rid of it at a heavily discounted price, because you're just holding it for nothing. If it's just newer stock, then obviously you wouldn't want to discount that heavily like you would redundant stock. But
it was like I was talking to one of these business coaches, which is like yourself, she's an accountant based in America, just trying to think of a name now. But she was saying, a lot of business owners, we're going to the end of financial years and we're missing what she calls the fast path to cash. Put some cash in your pocket. And when you're talking, what she was saying was, apart from stock, sometimes if you're a service orientated business, you can even discount your services. Look, it's the end of financial year. Because I know you're going into tax time, I'm going to give you a discount. You can claim it on your tax deduction anyway. But all of a sudden, you've turned your time into cash as well, rather than sitting there going, well, no one's buying because it's the end of financial year.
That's exactly right. And I've actually advised a few clients to do exactly that.
Wow.
So they offer training programs. And I've gone, okay, for the month of June, just to get some cash in the books, and just update their cash flow, put out to your database of clients who need to renew their training program, or to new people wanting to learn your program, discount it for the month of June. Then you're going to have a full month of June.
Yep.
The people are going to get a tax deduction because they can claim it against their income.
Yep.
And you've got a full house.
It's a great way to put, as you said, people when they go into tax time, I think we panic because
Yes.
we go, well, I haven't put anything away.
Yeah.
The tax man's going to say, I owe all this money, and I'm going to go, well, it's not in the bank account, mate. But I suppose it can take a lot of pressure off you, can't it?
Yes.
I mean, people say, well, I'm discounting my time. Well, you were getting zero for it to start off with.
That's right. Exactly right. But Michael, you said something earlier before about coming to tax time and not knowing or having to pay an amount to the tax office and you just don't know. Now,
Yeah, Bobby's going, are you speaking from experience, Michael? Yes, I am.
so yourself, like many other business owners out there, are business savvy.
Yeah.
Number savvy are not so much. Hence why it's really imperative to have those quarterly meetings with your accountant and more importantly have your end of financial year tax planning meeting. Reason being, I do these with our clients because I want them to know what they're expecting to pay before it happens.
Yeah.
Because if you fail to prepare, you prepare to fail. And that's
Exactly.
I've said that before, and I'll keep saying it again.
Yeah.
Because you come to see me. Let's say, for example, you see me in I don't know next year, next February, and that's 7 months after 7 or 8 months after the financial year end,
Yeah.
30th of June. And then all of a sudden you're the tax man, $20,000 in a couple of weeks' time.
Yeah.
Well, Bobby, I don't have that money. Well, I told you to come see me before and continue to come see me during that 8-month period, but you chose not to, and now you're in that bit of a predicament. So it's more us trying to keep you accountable,
Yeah.
but you also have to keep yourself accountable at the same time.
Do you find when you have quarterly reviews with your business owners that because you're focusing on their business more than just the numbers, that they tend to start getting business growth? Because we
Yes.
hear this term all the time, what you focus on gets your attention, when you get your attention it
Yep.
tends to grow. Is this one of the reasons why you do it?
Oh yeah. It just keeps us accountable for you, and each time we catch up,
Yeah.
it's what other little one piece of information at the very least can I get out of Bobby in this review meeting. And with that, I've had a few clients go, Bobby, you're right, I'm actually too cheap. I need to up my prices. I've upskilled myself and my team. We've upgraded our premises. We've got better software services. We've got better integration with the client software, all these type of things.
Yeah.
Or upgraded equipment in their premises or anything like that. And the clients are getting much more value for money, yet we're still charging the older price. So those points are really good. I really like looking at price compared to value with people.
Yeah.
Some people I've said, well, listen, you're not really providing as good a value as you think you are to your clients, so why don't we drop your price back for a little bit until you grow that a little bit more? Because exactly what you said, if you don't drop your prices, but I'm not saying to drop prices all the time, but you may need to have a good think about it, because it's better having 10 clients than 0.
Exactly. It's
Especially
like-
when you start your business anyway.
Yeah, well, it's a quick way to get clients. If
Yes.
you can get them in, people say the first hour free, or the first month there'll be a 50% discount.
Oh, exactly.
And look, even the accounting packages, I don't know about the rest of the world, but we use Xero. I mean, I love Xero. And the guys rang me up because we just set up a new company trust, and he's gone, look, for this month, I think it's 25% discount or something. That's a massive company, and even they do it.
That's exactly right. Yeah.
And I'm already a customer. They're going, no, if you re-engage in this, we'll give you 25. I think it's 25% off because my wife does that part of it. But it's like, if a big company like that can do it, there's obviously value
Definitely.
in it for them.
Definitely.
Yeah.
Well, for all new clients that come see us for a 1 hour business advice meeting, we give, as a thank you, we give a first 30 minutes complimentary.
Yeah.
Because we're thanking you to actually seeking us and sourcing us out, and compared to the millions of other accountants in Perth, Western Australia.
So what else do you go through with your business owners as like your growth tips? I know you're big on the stock.
Yep, big on stock, and okay, not so much growth, but unfortunately people have bad debts, have debtors that just literally haven't paid.
Yep.
And it's more so having a conversation with those debtors, or what's your experience that you've had with that client, and good or bad. If it's good, then you may be able to get some of that money back, but if it's bad, you might as well just write it off before the 30th of June and claim the tax deduction, or not pay income on it. So that's one thing as well. It's a bad part of business, because of course you do a great job and you want all your customers to pay you, but times can be tough. Life happens. Clients come and go. You may have not have provided the right service to that customer for whatever reason in their eyes, obviously compared to yours. But these things happen, and it's just cool. Let's just clear the slate and once again get that tax deduction.
It's really interesting from an accountant's point of view that you actually do that. You actually go through and analyse the bad debts, as we would call them, because some just need a phone call, as you said, but some are. There's either legitimate reasons. They've either gone out of business themselves, or they're broke, or I mean, people go through some horrific things in the economies. It's really interesting as a accountant. You actually go, well, it's actually cheaper to write this off, and let's just get rid of it.
Wasting time, hours and hours on phone calls, emails, and it's always a cost benefit.
Yeah.
If it's a $100 debtor, just wipe it off.
Wipe it off.
10,000, maybe different story. Or depending on how big your business is, it's all relative.
It's all relative, isn't it? Jeez. So when you sit down, and that's interesting, because as an accountant, you're obviously used to numbers, but you're also very good at reading agreements and so forth. When you're with your clients, when you talk about pricing structures with your clients, it's really interesting. From an accountant, you analyse it differently than maybe an emotional aspect from a business owner. Do you find they have these aha moments with you?
Yeah. It's when you're in business, and I know all of you business owners out there, I do this myself, and I know you do it as well. You literally have the what is it, the blinkers. The blinkers, that's the one. You just have your blinkers on, you're just looking between those two lines. Whereas you have that third party person come on board, and it literally opens up clears the blinkers, and you see the full spectrum of vision. Excuse me. So with that, it's looking at all aspects of your business. Pricing is a great one, because you go, I've got a great price. But is it really? Is it just a great price compared to your competitors? Are you cheapening yourself compared to competitors? Or are you too expensive because you feel that your service or product or whatever you may be in business with is better than what is much better than what it actually really is?
Yeah.
So pricing is one of the big things. Yeah, it's and not just pricing, but it's marketing. It's what are your sales process? You may be saying to yourself, I'm the best salesperson in my business, but then you've got a whole range of team behind you, or underneath you I should say, ready and willing and able to make sales for you, but you're just that controlling. And it's like, okay, how's about you give your team some space and let them have a crack, because and that also pulls the reins back from you a little bit. You can focus on other areas of the business.
It's interesting you talk about pricing, and like some of us are in physical products. It becomes a little bit easier when we've got a cost for wages and we've got our materials, and we kind of go. When I was at cabinet making, I was got a great old cabinet maker told me a rule of thumb. He said a third.
Exactly.
Third for materials, third is labour, and a third is your markup, and that'll cover all your bits and pieces, and you'll walk away with a bit of a profit. That's about as technical as he got with it. But some of us are in that advisory capacity when it is really in exchange for time for money, and they're suddenly going, I'm not earning enough. But they get in this quandary of just, I've got to work more hours to get more money, or I'm not getting. How do you help them get? I mean, you are in a time for money service industry. How do you manage your time so it becomes billable hours? Is a horrible word, but
it is, and that's how we do generate money, because it's an intangible product that we give out. We give advice and we prepare tax. Obviously, the tax return and financial statements, that's a physical document. But potentially charging someone $10,000 for a piece of paper, what's the benefit of that? And that's where it comes down to your communication with the client. What are they getting out of that? Let's say if it's an hour meeting, what are they getting out of that hour meeting? And if it's not a 1 hour, if it's like a long-term thing, I'm really big on what's called fixed fees
Yeah.
or value-based costing, which I know a lot of advisory firms out there do. So if it's for profit generation, let's go, okay, with this strategy, if you turn over $100,000 more profit, okay, what's that value to you? Oh, well, geez, I'd love to get that. Well, okay, let's say 15% is my fee.
Okay.
So they give the advice in the weight in lieu of that 12 months.
Right.
And great, if they hit 100 grand or more, then they get 15%. If it's under 100 grand, then let's work out another percentage.
Yeah.
Because obviously nobody's time is free, but growth is still growth.
Yes. Yeah, that's true.
Yeah.
And I have seen a few advisors in my time do exactly that.
Yeah.
They've actually edged their bets almost and said, look, this is my base fee. Now you can pay my premium fee, which is this, hey. Or because they've got faith in the person, they're going, well, I'll put a base fee, but then I'll take a percentage of the profits or the increase that you actually get. There's actually an advisor in Perth, West Australia who did that. Did very, very well, backed himself. He was very particular with his clients,
and
though.
that's what you need to be. You need to pick and choose the clients which you do that, because and that comes down to knowing your clientele, understanding them on a personal basis as well, because effectively you're going into business with them. You're effectively buying a share in their business on a commission taking.
Yeah.
So you really have to be in tune with that person. That great, will they actually put our advisory strategy into place, or will they just twiddle their thumbs and go, I'm not going to pay the accountant or the advisor or whatever. Yeah, so that's just that one pro, but also it's a big risk as well, because if your base fee's $5,000 and then you've got potential to make another 20, but then that doesn't happen. Well, hey, at least you got $5,000, but was it a worthwhile exercise providing all that advice? So
yeah, it is a thing. Do you find that when tax times come around and people then come to you and they're doing their books, do you find a few of them start going, I wonder if I should keep doing this? Should I sell my business, Bobby? And they start asking these questions because they suddenly have to pay something to somebody they don't want to.
Exactly.
It's the ATO.
And we get that question all the time. Bobby, what's my business valued? And that's what we do. We actually value businesses on a few different calculation-based models, depending on what's the most particular to your industry. Yeah, so we look at your figures in the past, we look at your figures to date, what equipment are you selling with the business, all these bits and pieces, and go, great, if you really want to sell it, this is a ballpark figure of what you should be looking at attaining on the sale.
Okay, so you can actually analyse this for them and give them some kind of a picture on what it could be worth.
Exactly.
I think one of the benefits of working with you and knowing you for quite a while now is you can take that picture and go, look, that's a snapshot, that's probably what it's worth. And then go, well, I want to sell it in 3 years.
Yeah.
But it's great working with you because, well, in 3 years I want more then.
Yeah, exactly. And that's what it is. It's what systems can we put into place to make that, let's say you want to sell your business for $500,000.
Yeah.
Bobby, I know it's worth more than that. Well, great. And effectively profit is what is the general indicator of what a business is worth.
Okay.
And it's a multiple of the profit. So effectively, the more profit you make, the more your business is worth it, because it's more attractive to somebody wanting to buy your business.
Yeah.
So we'd look at that at year one. We'd look at, say, okay, this is what it's worth now. In 3 years' time, what can we do in those 3 years to better the systems, cut costing if required, better your sales processes, better your pricing models to get that business to where you want it to be to sell in 3 years' time? Because it doesn't happen overnight.
No.
You put all these strategies into place now, you're not going to reap the rewards for 6, 12, 24 months. You don't know.
Yeah, you've got to give it time to work its way through. And there's always that lag, isn't there? You put something in place and you've got to wait for things to catch up to get the impact.
It's tough because us millennials, we just want it now. We just want everything now.
I did this yesterday. Where's my money?
That's right. Patience is a virtue.
Patience is a virtue.
It is. I mean, and especially for all you startup business owners out there, we say it takes a minimum 2 years before your business even gets recognized in the world. Not even gets recognized, but your brand gets out there, it gets recognized, you're getting more and more clientele. It's happened to us, and to get reap the profits in the business, it's year 3. So that's what we're heading towards, year 3 now, and this is where we're going to see some dividends back in our own pocket. You know, first 2 years it's reinvesting your money back into the business, growing it, getting the right team in place, getting the right branding in place, and content marketing, all that type of stuff. YouTube marketing as well, definitely great.
And you know, I found the same. I found that, you know, in all the business I've had, that first 2 years, and I don't know, you start off and you look back from in 2 years to where you started, and you realise what your business has morphed. It kind of morphs, and you kind of find your own groove almost that differentiates you from everybody else.
Exactly right.
And when you can lock that in, you've kind of created this momentum that there's this subtle shift, and you start going, I might not be earning much more on the 25th or 26th month, but hold on, more people are starting to talk to me, and you can feel it. And by, as you're saying, that 3rd year, the profits start to come in. And I think this is a really crucial time that when you need to have an advisor, a third party.
Yes.
Because you can get excited. You can go, yoo-hoo, I've done all the work, and take your foot off the accelerator.
That's right. And it all comes down to the individual or the team in place. It's I like to call it the hustle. It's you just
the hustle.
Never stop hustling. You can always be better than what you are, and that's not. I don't just talk about that in income wise. I'll talk about learning. You can never not learn enough. You can never not hopefully make enough.
Yeah.
And you can also never not provide a poorer service. So keep providing that good service and that good quality products to your customers, and that's how you just continue growing your business.
And you know, I'm a huge advocate of that. I think there's an obligation for a business owner, no matter where they are, that if you've got customers, they go, yes, I'm happy paying for that. But your obligation is to go, guess what we're doing now, and to up the ante. And the customers are going, you just keep improving it, and they won't go anywhere. They'll go, well, where's the next level? Where's the next level?
That's right. If you keep them engaged. Keep them loving you effectively, loving your brand, loving your business. Keep your team working harder for the customer to provide that quality service. And exactly right. People will just be waiting for, what's happening next? Yeah.
So what about, we've had all the nicey stuff, but what about the poor old person, with their own fault, but you know, let's be fair, people get into business, and if they've had no business experience, they really mess things up.
Exactly, yep.
And they are going, oh my goodness, it's the end of financial year, I've paid no GST, because we're in Australia, I've never bothered about this, I've paid no tax, and they're really panickingly going, I've got a serious problem. I've got shocking bookkeeping. All I've got is my bank statements. What can they do, Bobby?
Well, the best thing is to call us as your hopefully new advisor.
Yeah.
Speak with myself and my wife Crystal, who's our head bookkeeper of our team.
Yeah.
And we'll go through your business systems. We'll have a good, solid advisory session with both of us. We'll look through your business processes. We'll look at what you've done in the past, and Crystal and I, and both of us will look over your bookkeeping and see, well, hey, why your business isn't doing so well as you may have thought is because you're focusing too much time and energy on the non-important things of your business, one being your bookkeeping.
Yeah.
So that's it. I know that for customers that we've currently gotten have come on board with us for us to do their bookkeeping, they've gone, outsourcing that to you has been a godsend, because I've now got more time to grow it's cheap, And I mean, a lot of people think it's expensive, but when you get the right people doing it, we've got the right systems in place to make that more efficient, whereas you don't.
And I think that's, you're saying quite quickly, it's efficiency. So what might take me 3 hours, and I see an hourly rate and I go, 3 hours, but it's not, because Crystal gets hold of it and it takes her 30 minutes.
That's right.
And all of a sudden you go, so for her, for my small little business, 30 minutes a week, no, that's not. And even when it grows, it's like an hour, but would have taken me 4, takes Crystal an hour. I've seen her do it. She goes, it's done in an hour. It's like, hold on, how did you crunch all that into one? But it's just, as you said, those efficiencies.
And it's because we've taken the time to train ourselves in the various online bookkeeping softwares to make the rules and processes more efficient. So we've already got that. Instead of you spending 2, 3, 4, 5, 10, 20, 100 hours
Yeah.
learning the training on it. And you could spend that 100 hours
Yeah.
making sales in your business or bettering your own processes with your team.
And I think, the intangible benefits that I see as well, that pressure lifted off you. I don't have to worry about my GST. The bookkeeper's doing the work. Crystal's in there doing all my Xero, which is what we use, and the accounts being taken. So I don't have to worry. GST comes up, look, your GST is due, that's what you owe. It's already done.
Already done, yeah.
I just go, cool, excellent, and it's just goes straight through.
Yeah.
There's no worrying anymore. There's no stress about it.
That's right. And you spoke about the GST and you said,
Yeah.
great, once we do the bookkeeping at the end of the month or at the end of every quarter,
Yeah,
that's how much GST you pay. But as we were talking off air earlier,
yeah,
we spoke about how can we better that. So what we advise our clients is when you have a business, especially if you're a sole trader, keep your personal account separate to your business account. And when you have, because that'll obviously distinguish what your business income is and what your own personal income expenses are. But not only that, it'll force you to transfer money into your personal account as a wage.
yeah,
So when you do grow into a proprietary limited company or a trust structure or whatever it may be, you've already got that system in place of paying yourself a wage and you've got that habit. Not only that, but we also recommend setting up a separate account, which is we call the GST account.
Yeah.
So every dollar you make, put 10 cents away into the other account. So if every week, if you make $11,000 a week, put $1,000 straight away into the GST account, and then you've got that for the end of the month or at the end of every quarter when you lodge your GST.
yeah.
You don't have to scramble around looking under your sofa for your coins or
Right in the kids' money jar.
digging the hole in the backyard for the $100 bills that you've buried there. No, if you plan that way,
Yeah.
then you're never going to be behind with the tax office, especially here in
Yeah.
Australia. They're really getting quite difficult when it comes to paying late.
Yes.
And so we advise our clients to get those systems in place, because not only that, it forces you to not have that money effectively.
Yeah.
You've only got less 10% of, and
Yeah.
we also say to put another 20 to 30% away for end of year tax as well. So that's
Yeah.
another thing we put away.
Yep.
So then really, on every dollar you earn, you've really only got 60 cents in a dollar to play with,
Yeah.
to pay your staff, to pay yourself, to use in your business.
You phrase it like that, and I'm sure a few people go, oh, I'll never survive. But unfortunately, it's a reality.
It's a
then.
reality. It is.
It's
yeah.
a reality, and those habits they are difficult to start off with. A friend of mine was doing the 25% rule when they first start their business. They've talked to their accountant, and then while they can't afford 40%,
Oh yeah.
he's gone, we'll put 25% away. But because they've been doing that, and then in the second year they up that to a 30%,
Yes.
they are so far ahead of the game. It is just, the stress is gone and they're getting used to it. And I know this year they're planning on going to 35% tucked away.
Yeah, and that
You know.
should be the max they'll probably need to do. 35% sounds pretty good to me.
Yeah,
Definitely.
But they've gradually, because they've done it from day one, they've gradually stepped it up. So they just go, oh yeah. You know what it's done for them as well? It's really affected their pricing model.
Yes.
There's no illusion that, I charge $100. Oh, I've got a whole 100.
Yes.
No. You've actually got 65 cents. And they've gone, hold on, we can't live on that. They've gone, you either get more customers, work more hours, or sit down with someone like yourself
Yeah.
and go, how do we do this?
Yes, exactly right. And that's one of the big things that we do is, we said it before, the third party aspect. It's somebody outside of your business who's got nothing to do with you except for being your accountant and advisor. But looking at a third person approach, because we deal with lots of other businesses. We deal with many business owners, big, small, short, fat, whatever it is.
Yeah.
We deal with everyone, and it's and with that, I suppose, volume of clientele that we deal with comes with experience. And what has somebody else done that will actually work well for your business, and what have you done that'll work well for somebody else's business?
Somebody else's business. Yeah, it's absolutely fascinating. What I find fascinating with yourself, Bobby, is this advisory aspect that you brought into accounting, and this. And I know you've had coaches yourself, and you're right into business growth. Well, for an accountant, for a lot of people, I mean, I know you, so it's natural for you, but a lot of people are saying, the accountant's going to help me grow my business?
Yeah.
I thought you just counted my money and...
I know, right? And it's something, that's been ingrained in people's minds 50, 60, 100 years. That's what accountants do. Times are changing, Michael. Technology is getting much more advanced. Millennials who are going up with the more app-based software, they're on their mobile all the time. They're on their computer all the time. They don't use paper. We don't use paper. It's little things like that which traditional accountants out there do, and it's just effectively the once a year ticking and flicking, off we go.
Yep.
But then that's not what the new age of people going into business these days are wanting. They don't need that. Especially the bookkeeping especially if you're starting up.
Yeah.
I don't need an accountant or bookkeeper to do that. I've got capacity to do that myself. What I need is that in that initial phase is how can I boost my business?
Yeah.
And that's what we do. We effectively boost your business, grow, and then get that to a point. Then we revise what we've done. What worked well, what didn't work so well. Let's try another avenue. Let's keep doing what worked well, and let's obviously draw the line in the sand, put what we didn't do in the past, let's learn from that and not make those mistakes again. That's the most important thing, not making the same mistake twice.
Yeah. One thing I noticed when I was talking with Crystal, because she's right onto Xero, and she was just showing one of the techniques was, with you, especially with service oriented, like doing lawn mowing and plumbing, I think she gives a couple of examples, how at the completion of a job, right from your mobile device, with this software, the invoice is there, and click the payment there and then.
Yep.
How fantastic's this?
Yep. So your app, your Xero app or QuickBooks app or whatever it may be that you want to use, load up your customers' details, put in what you did for them. So let's say if you've got a lawn mowing round, you spend an hour lawn mowing and you pruned some roses and did some landscaping as well. So invoice comes to about $1,000, right? You just pop in all your description in there, or you can have those pre-populated and literally just tick and flick as you go.
Because I know Crystal sets that up for you.
Exactly. So you've got that all pre-set up with your pre-planned pricing.
Yeah.
Obviously there's a few variables, as always is, but put those variables in a separate column, bam, email it directly to the customer. Customer's happy, they've got the invoice right in front of you.
Yeah.
And then you've got we use a Square Reader to take payments.
Yep.
We don't have a mobile FPOS facility. We've just got the Square Reader, which plugs into our phone.
I know, they're great.
Fantastic. And then, credit card, Visa, whatever it may be, great, pay now.
Yeah.
Excellent. Customers happy, they've got the service provided. You're happy, the customer's paid you. And off you go to your next job. There's no worrying about debtors. There's no worrying about delayed invoices. I was listening on the radio the other day.
Yeah.
Apparently there's one plumber in Perth, I didn't catch the name, they didn't mention the name, but there's one plumber in Perth who did a fantastic job, and people are calling up saying, yeah, I've got the same plumber too. He hasn't invoiced me and he did the job 3 months ago. Either this guy's got that much money or his systems have just fallen and they just don't work.
And that is a big thing, and that's what I've found by listening to yourself and Crystal. And Crystal especially, because she's running that point, what I call the pointy end.
Pointy end, exactly.
Get you the money. She goes, look, let's find systems to get you the money. And but she was pointing out, and she's done a few videos. I know she's got these tips as well for using your software. But she's saying, what normally happens, the systems fall down.
Yes.
She's going through and saying, well, hold on, here's some old, you haven't even built these people. And the people don't realise because they don't have the systems. They haven't got that set of eyes looking, going, well, what happened here?
Exactly.
And she puts all the stop gaps and fills all those holes up.
And that's what happens, Michael. It happens when you take on too much responsibility in your business and you've got that fear of letting go.
Yes.
And let's say you are a gardening specialist and a lawnmower specialist. Do what you do best.
Yeah.
You weren't there to worry about computers or worry about billings. outsource the bookkeeping. For example, let's say a lawn mowing round, $35.
Yeah.
It takes you half an hour to do that. Your bookkeeping, it may take us only an hour a month. That's $77. You work for an hour doing 2 lawn mowing rounds, and you've paid for your whole month of bookkeeping, and you're saving yourself the stress, the time, the energy, and especially when it comes down to those, oh, Tony, you haven't, you've got all this time that we've seen your calendar, you've got these people booked in, but you haven't billed them. What have you been doing? We've set the app up for you, we've done this, done that. Oh, I forgot about it. I said, oh, great, cool. So then Crystal will come along and just go, great, we'll just push the invoices out to the client for you.
Yeah.
And it may be late, but it's never too late to get paid anyway.
Exactly. And one of the other systems I did like that Crystal sets up is this recurring. So the invoice goes out, if it's not paid within a certain time, sends a nice reminder to them. Look, we know you get busy, you might have forgotten. And I love that idea that you don't have to worry about follow-up. This thing's automatically following up because the way she sets the whole program up for you.
Well, funny you mention that, because Tegan, our admin assistant and junior accountant, she actually got an email from a customer saying, oh, my apologies, Tegan, I've just paid the invoice now. And she's gone, I didn't realise I sent any email. And it's just all done behind the scenes, Michael. And it's while you sleep, you're making money while you sleep, effectively, you know. And it's the automation, and that's what we love doing, making your systems automated, because the less work you have to do with all the fiddly bits in your business, the much more productive you're going to be.
It's absolutely sensational. Bobby, Ultimate Tax and Advisory. Best way to contact you, Bobby?
Call us on 08 6144 3370 or check our website out ultimate-tax.com.au, and we're also very heavily on Facebook and Instagram, Ultimate Tax and Advisory.